Hello, lovely people. How is everyone doing out there? I'm Kate Hill, and I'm here to give you, as always, the best unbiased and honest commentary about our property markets, along with fantastic hints and tips. Stay tuned today for all your latest property news. The chief executive of the REA Group, which publishes realestate.com.au, has reported that most buyers are not deterred by the recent interest rate rise, with many having factored that into their calculations already. REA Group say that the rate rise was off a very low base, and even if more predicted rises occurred, will only put the market back to where it was pre the pandemic. The market, they say, has already factored it in. Anyone buying at the moment is doing so with a full expectation of these rate rises. And we're still seeing really healthy levels of listings and transactions, they say. The banks have been using 5% as their serviceability interest rate. So anyone who is taking out a loan in recent years has been assessed as having the capacity to meet repayments at a much higher rate. They believe that demand may slow over the year, but they say that in light of recent strong activity, this is a healthy outcome. Bank economists say that homeowners should not fear rate rises, as many can comfortably afford increases. The ANZ chief executive says that the cash rate should be, or could be, 2% by the end of the year, which, although higher than the recent low of 0.1, is still really low by historic standards. ANZ has $285 billion worth of home loans on its books, and they say that over 70% of their customers are well ahead on their repayments. They say that when rates went down, most customers did not reduce the amount they were repaying, so they've actually built up a really decent buffer. Now that means that once the bank lifts interest rates in response to the RBA move, 70% of their customers won't actually have to find any more money, as they're already paying above what is needed to service the mortgage. They say that many of their customers are now 2 years or more ahead of their repayments, and only 0.7% are behind on repayments. Regional property owners are very slightly more likely than capital city owners to sell for more than they originally paid, according to the latest CoreLogic Pain and Gain report. Regional Australia property owners achieved a higher price on 94% of sales, compared with 93.7% for capital city owners. Nationally, 93.8% of resales were a higher price, up from 92.4% in the previous quarter, for a total nominal profit of $38 billion. The report says the national median nominal gain was $319,000, with total resale profits of $38 billion over the December 2021 quarter. For those who sold for less, the median loss was $34,000. CoreLogic say that houses are more likely to sell for a profit than units. Investors had a lower incidence of profitability than owner-occupier sellers, says CoreLogic. They say that while investors and owner-occupiers tended to hold properties for the same period of time, which is an interesting statistics, it was the type of properties purchased by investors which resulted in smaller profits. Listings of properties for sale rose 4.8% during April, but they still remain well below the levels of a year ago. SQM research data puts national listings at 228,000 properties, which is up from 218,000 properties in March. The largest increases in listings in April were in Hobart, Brisbane and Sydney. Despite month-on-month increases, numbers are still about 13% lower than at the same time last year. Now, SQM research says that April is generally a slower month for listings as a result of multiple public holidays. There may also have been an element of caution by would-be new vendors, given the perceived slowdown in some property markets, according to SQM. We've also got that federal election coming up. They say that absorption rates across the country are slowing. In other news relating to the shortage of supply, housing approvals dropped by 18.5% in February. Approvals for standalone dwellings fell 3.1%, and attached dwellings, which is apartments, townhouses, semi-detached homes, dropped 38% according to the ABS. Now, we will keep you posted on all things property from around Australia as our year progresses. Please don't forget to hit that subscribe button and click the like button for me too if you are enjoying the free content, and I will see you all again really soon. Bye.